welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. This is a show where we'll help you understand the closing action on the D Street and also help you with the experts' views on the markets and specific sectors and stocks and where exactly should you be putting in your money. Quickly, let's look at how the markets are trading. Slightly subdued on the benchmark index level, 19,800 being seen on the Nifty. About 8 odd points lower in trade. The Sensex also now slipped into the red zone. Absolutely flat, in fact, 66,025 being seen right there. The sector that's not doing well today is the PSU banks. That slipped a bit in trade, but rest of the sectors are managing to hold up into the green. We are also seeing IT, healthcare and consumer durables now coming under slight pressure. Healthcare index, in fact, 1.5% down in trade. That's the sector that's losing the most in trade. However, there are a lot of stock-specific actions that we can see. On the Nifty, it's the two-wheeler pack shining through. Hero Moto, top gainer, Bajaj Auto, Eicher Motors. These are the top movers in trade. From the Nifty 500 basket, you do see stocks like EID Perry now topping the chart, 7.5% higher in trade. HPCL, Campus Activewear, Aditya Birla Fashion and CDSL as some of the stocks that are buzzing the most from the broader markets right now. Let's also welcome our guest on the show. We have Gurmeet Chadha with us and Managing Partner and CIO of Complete Circle Capital. Good afternoon, Gurmeet, and thank you so much for taking the time out. Your own sense of how are you looking at the markets right now? Lots of action in the primary market space, secondary markets, several sectors are participating in an up move right now. Where are you putting in your money?
So I think market is very fairly positioned as far as valuations are concerned. Even if you look at FIS, for example, I think the positioning has been very light. So they sold almost $25 billion in 21. That money hasn't really come back. So whatever market has made is actually with very less FI support. I think there are two near-term triggers. One is if inflation data continues to be soft, and if US Treasury yields continue to inch lower, we are already at about 440. It crossed 5 briefly, and that's when we saw outflow of money. I think the market should be fairly okay from an FI sell-off perspective. Secondly, I think any adverse state election result can spoil the sentiment a little bit. Although I think the market is probably priced in what's going to happen. So unless it's not according to that, I think there'll be some bit of pressure there. And more importantly, I think India is in a good Goldilocks state. We are growing at about 7-ish. Our inflation numbers are between 4 to 5%. It's not too hot, not too cold. Strong GST numbers, strong all macroeconomic indicators. If you look at capacity utilization at about 70%, so that indicates we are in a beginning of an investment cycle. Bank credit growth continues to be good. So I think India is basically okay, and that's why this buy on dips template has worked. But you just need to be little cautious now. Rebalance maybe more towards large cap. Book some profits where there is very sharp run up in small mid cap space, and maybe add some bonds in the portfolio. I think the interest rates have peaked. If you see the FOMC minutes, I think even the bond in near term could deliver double digit returns.
Right. Gurmeet, from the IPO space, if you could tell us, how are you looking at this entire buzzing action? I mean, many of the data points really surprised us. 36 minutes and Tata Technologies IPO was subscribed fully. IREDA was subscribed on day one. In fact, 4 of the 5 IPOs that are running already, they're all oversubscribed. How are you looking at this space? Which are the top, picks according to you as far as the IPO space is concerned?
I think Tata Technology is clearly, I think, probably has a consensus view. I think great company. We were fortunate to visit their site last week in Pune. Some amazing stuff they are doing, and it's important to understand the difference between what Tata Technology does and what an LXZ or KPIT does. Tata Technology is actually complete digital engineering services end to end of the value chain. So they are starting from concept to design to mechanical to software embeddlement to the end of the value chain. And KPIT and LXZ are more on the software side, right? So it's a complete value chain, lot of dependency on automotive, almost 80% there. In fact, they are the ones who converted Tata Tiago to the electric version. So they specialize there. They're also working very closely with a lot of OEMs. They have the highest on-site mix. So some amazing work they are doing, and they don't really compete with OEMs. So they will not, for example, make an autonomous driving system. They will actually help an OEM integrate that, and also, monetize some data, because these days cars have, instead of earlier cars used to have 30 ECUs, Now these days cars have almost 80, 90, 100 ECUs in some of the advanced cars, which is electronic control units. And you can capture so much data, your braking pressure while you are going on high terrains, your tire pressure, your fuel efficiency, and all of that data can then be, can be monetized or even looked at, improving customer experience. So I think it's a great, very, very nicely priced IPO almost after 20 years. So if you see this year, they'll probably do 750 crores PAT. You're getting at the upper end at what 20,000 crores, so that's about 26, 27 times, almost one third of the valuations where peers are. But unfortunately, you may not get much. So you'll probably have to wait and hope that listing gains are more modest than you can get it. So that's something we like the most in that space.
Let's look at a market in a different format and look at spaces where a lot of retail interest as well as institutional interest is coming up. Firstly and foremostly, it's the sugar pack, which is showing signs of extreme gains. Let's look at Balrampur Chini. This is a stock which is headed to its highest level. The last we've seen on such prices was 22 months ago, somewhere in April of 2022. At the moment, Balrampur Chini has about 8% rise in open interest and a 2% rise in price at about 471.85 in cash. We have a decent volume as well on this one. The other stock that I wanted to mention was Praj Industries. These are stocks which are really high beta, and you'll see a lot of fresh moves coming into Praj in a day or two. At the moment, it's at 602, 609, decent 5 crore worth of transactions that have happened and a fairly strong momentum. Needless to add, this stock is also trying to put in a fresh high. We've seen similar prices in October of 2023. We've seen similar prices in September of 2023. So another breakout on the cards as far as Praj Industries and Balrampur Chini are concerned. Apart from that, you've seen some traction coming into Renuka Sugars, Rana Sugars, as also Andhra Sugars. So it's a sectoral led move when it comes to pricing in sugar. And the fact that there was a market report saying that nearly half the mills in Maharashtra have yet to begin their production as far as the fresh sugar year is concerned. So this is something that you need to look at. Both Balrampur Chini and Praj Industries offering very strong technical moves that are coming in. The other stock that needs attention is Bajaj Auto. Fresh record high 59.57 as far as prices are concerned, 59.33, and a 7.5% rise as far as the open interest is concerned. So this is something that we've been tracking since yesterday. These are the three stocks that are creating a lot of activity, including Renuka Sugars at 52 rupees. Fairly strong block deals happening in this one. Sakshi.
Absolutely. Gurmeet, would you talk about your top picks as far as the two-wheeler pack is concerned, just like how Shell really pointed out, Hero Moto, Bajaj Auto, TVS Motor, Eicher, how would your pecking order be like in terms of these two-wheeler stocks now?
So we got a little lucky with the TVS group company. It was Sundaram Clayton before the demerger happened. You got an auto component company, you got a preference share, and you maintain the holding company. Since then, it's been almost a 60-70% rally there. And if you see the festive season has begun well, if you see the commentary, especially the Dhanteras numbers, etc., we'll wait for the November numbers to come out. But we are seeing some uptick in rural economy. I was traveling to MP, the soybean prices are up, the winter sowing is also marginally up, and then you have state elections, and then next day would be elections. So I think that part of the economy has been soft, and I think there's some focus with better crop, more MSPs, more focus by the government. We have another play in auto ancillary, which is Sandhar Technologies, which again has done very well. In fact, made a new high today. And earlier this was just one product and one single supplier. So they used to make locks and vision systems for Hero. Now their two-wheeler dependence is just 55%. They've added a lot of labels, including TVS, including Honda, HMSI, the scooter segment. They got into fabrications, metal sheets, cabins, etc. Other than the bread and butter, so that's something which is doing well for us. And I like M&M. I think since that RBL thing, the stock has been under relatively subdued pressure despite good performance of the other. Their SUV market share is almost back at 19-20%, and tractor market share also is upwards of 40%. So that's something we will look at in this entire space. Bajaj Auto is probably, unfortunately, run up too high for our comfort.
All right, fine. We also have another guest with us. Soni Patnaik is now with us. She's the AVP Derivatives Research at JM Financial. Let's welcome her as well on board. Soni, welcome to Business Today Television. Your own sense of the kind of move that we are seeing in the two-wheeler space, technically speaking, which is the one that is strongest on charts right now?
Good afternoon, Sakshi. Thank you so much for having me on the show. So speaking of the entire auto sector, it's doing quite well rather in this choppy market as well. We can see in the entire pack, Hero Motors, Bajaj Auto is doing pretty well, which is it has hit a 52 weeks high today. So I think that definitely would be one of the top picks. Understanding that how they've still been building up long built positions today, Hero Motors and Bajaj Auto. So I think these two should be the top picks and the best bets of the entire space.
Fair point. Bajaj Auto is something that we've been tracking for a while over the last 2 or 3 sessions. A lot of positive developments coming in from the company side in terms of their EV space, as also exports that are likely to rise fairly substantially. Let's pay attention to some other stocks, Soni. Would you be looking at Praj Industries? This is something which is poised for a fairly sharp uptick. What are the charts telling you?
Right, of course, if we do look at Praj right now, it is poised at a very fresh breakout. Even from current levels, it looks quite strong. In fact, there's this level that I can see up to 640, 645 on very short-term positional trade. This would be a very good bet, even at current levels, to buy, and you can hold a very good support of 590, which should act as a stop loss also from current levels. So it definitely becomes a buy from these current levels for 640 targets.
Right. This is the intraday chart for the stock. I'll request the PCR to fire a long-term chart, and that is where the breakout will be visible. This is something that is moving up at the levels of October and September. This is a 5-year chart. Let's try a 1-year chart. That will be a far more sensible thing to look at. This is, of course, pointing out to immense wealth that the stock has created over the past 5-6 years. This is fairly good. So you see the previous peak in October and the one in September. Most probably you will see a breakout on this one. The other stock, Soni, for your reference is Aditya Birla Fashion Retail 225, one of those rare stocks in the mid-cap space which are now trading below their 200 DMA, but a very strong traction coming into the FNO space. What are ABRFL charts telling you?
So if I look at ABFRL charts right now, it has shown you a price plus volume action breakout today. So it's a very strong combination whenever these two have combined. And to add to it, we have also seen very aggressive long builder positions from the derivatives point of view. So ABFRL on a very short-term position, I can see 240 as coming in. But if I have to place it for perhaps like a medium term from current levels, it is definitely poised to test 280 plus levels. That holds like a 3 to 4 month sort of a positional play. I think both from a very short-term trading perspective and a 3 to 4 months of a positional play, both stand out to be quite attractive at current levels. And if we look at some good support, it has held on to very strong support for the day, starting from 218, which was its breakout level. So I think 218, 215 should act as an immediate crucial support band.
Okay. Gurmeet has to leave, but before we let you go, Gurmeet, one last question on HDFC Bank, which has been your ever favorite stock. Talk about that. Finally the needle is moving on HDFC Bank. What would you now advise investors here?
I think the merger hangover seems to be now, it was overowned. So there has been obviously been some forced selling. Also, the performance was slightly, I would not call it subpar, but, was slightly less than what the other private banks offered, including ICICI, Axis, and some of the mid-sized banks. So that's another one, which resulted. Now, if you see the combined entity pre-merger, their market cap was up around 40 lakh crore. Post-merger is now 11 lakh crores. Obviously, if you adjust some for cancellation of shares, it's actually it's trading below the pre-merger one. The combined entity now trades at 14 times earnings, roughly about 2.2 times book. So I think it's as reasonable I've seen over a long period of time. I think the market what probably wants to see that can they deliver 20% growth even on a 24-25 lakh crore balance sheet. They spent heavily on OPEX, opened a lot of branches in tier 2, tier 3 towns. Some of that should contribute. Fee income hopefully should pick up. Pretty reasonable. In fact, as I was telling that half of the Nifty hasn't really moved. It's probably at 17,000. HDFC Reliance alone put together is 25% of Nifty. You add IT pack, you add SBI, Kotak, HUL, etc. Probably 55% Nifty is much below 10-15% below what the fair value is. So I think pretty constructive there, and also on some of the other banks. Even ICICI hasn't done too well last year.
Fair enough. Well, we'll let you go. Thank you so much, Gurmeet, for sparing your time and speaking to us about the markets. What we'll do is we'll take a very, very quick break right here. But when we return, we will continue the conversation with Sony on the other side. Be with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Business Today Television. I'm Sakshi and with me is Shel Bhatnagar, and we also have our guest Sony Patnaik with us, AVP Derivatives Research. Welcome back, Sony, as well. Which are the other stocks that you're looking at? Any of the two picks that you'd like to suggest?
Yes, definitely, Sakshi. I'll have the first pick from the chemicals fertilizer space, which would be GNFC. So GNFC, we have seen throughout the day, it has been building up long builder positions, started off with 4%, then it has come up to 7% long builder positions. And the entire day, it has held on to very good support of 690. So in fact, I think it's a very good buy at attractive levels right now. Placing a stop loss of 690 can hold a target of 740 to 745 from current levels. And the second pick would be from Hindustan Aeronautics, HAL. So I think HAL also is poised to make a good breakout above 2160 levels. So here's preempting that breakout, and you can buy HAL with a stop loss of 2100 and looking for targets of 2300 to 2340 levels.
Okay, fair enough.
Right. And HAL is amongst the defense spaces that are doing pretty well. You've seen the three shipyards led by Cochin Shipyard doing phenomenally well in trade today. Garden Reach as well as Mazgaon Dock, and of course Hindustan Aeronautics being the highest beta for stocks in this particular space. Let's chat with Sony on a stock that is actually down, and it's down 7%. I'm referring to Cipla, Sony, and the news here is that one of their units in Madhya Pradesh have got a warning letter from US FDA. What is the level that you see Cipla reversing from? Obviously, we are in a bull market and this is a knee-jerk reaction, but a record high yesterday and the stock now 7% lower, 1173. what would be a level where you would punch in a buy?
Right, so if I have to look at this chart and also combine the options metrics data for Cipla, we don't see any major put unwinding taking place. So it is rather suggesting that there could be a contra buy, or maybe it's reached the support levels currently. The highest open interest, which is placed around 1160, 1150 put, which will act as your immediate good support. So perhaps another 10 odd points down, maybe like 1160, that should be a good place, a good level to enter into for a short-term trading place, because you can immediately place your support stop loss at 1135, 1140, and your risk reward becomes quite favorable from those levels. And perhaps from there we can see another bounce back coming up to again the 1190, 1200 odd levels. So these could be your trading range for right now. Avoid immediately, wait for that 1160 levels to be seen, and then you can go ahead with the levels as I've just mentioned.
Okay, let's do an interesting statistic as far as Cipla is concerned, and look at the 1180 call for this particular company. Cipla 1180 call at the moment is trading somewhere in the vicinity of, just a moment please, 19 rupees 60 paisa, and hold your breath, this is down 75 rupees from yesterday's close. So yesterday this was somewhere like 98, 99 rupees and is available at the current price. Let me see if we've been able to isolate it on air. Yes, this is the one, 1880. Your view, Sony, on this one? The interesting part I wanted to mention is that if you look at about 3-4 days ago, this call was in the vicinity of 1 second please, 54.55. Any view on this one?
Right, so of course, I think call option premiums, they're quite more, they react away more when the stock makes a movement, and now currently this call option has become out of the money right now. So if you look at how the 18 now, the premium has moved from 90 to 50 to then now current 19 odd levels, there is a definite fight by the call writers to get this premium to turn zero. Right, so this is how we can see and read the data from the options metrics, because the maximum call writing that we can see is happening today around 1200 call strike. 1180 is just a knee-jerk reaction to how the call writers are trying to place their aggressive placement across all the strike prices. I feel that from the moment this premium can be seen around 14 to 12 rupees, maybe that band, the call writers will start covering their short positions, and you can see a sharp short covering. So maybe from 12 to 14, that band should be a place where call buyers would like to pitch in and see a turnaround story for this particular strike. And then you can see it moving up to again levels of maybe 20, 22, not a lot. You'll not see it going back again to 50 odd levels, at least not for this expiry.
Okay.
Yes, and that's because you'll see a lot of call writing happening, because we are in the last week of last week of November, and of course Monday is a holiday. So keep an eye out on the Cipla 1200 call for maybe a day or so, and let's see whether this knee-jerk reaction stabilizes at the current level or not. Sakshi.
Right, Sony, why don't you speak to us on the power space? Some of the stocks are buzzing here again. For instance, from the PSU basket, it is NHPC that's trading higher in trade, and we're actually looking at NHPC extending the gains for the 5th consecutive day. They're up 1.5% odd, and the stock has been in the green in the 9 out of the last 10 trading sessions as well, up 38% odd or so. Let me throw in one more name here, Genus Power. It has been in a considerable uptrend again. The stock is 190% up this year so far. Again, today it's up by 4.8% odd or so. How are you looking at this entire buzzing space of coal, of power?
Right. So, Sakshi, first starting with NHPC, I can see that on weekly charts, it is showing you a rounding sort of a movement, where the breakout is expected anytime above 56.6 odd level. So the moment it crosses and sustains above this level, you see quite a sharp rally coming across this entire space. Most likely in NHPC, you'll see that getting impacted and reflecting instantly. So above this level of 56.5, the breakout comes in, you can enter, and you'll see very good rally up to 62, 63 odd levels, perhaps the place where you can start booking your profits. Quite positive. We've seen volumes, we're seeing RSI also giving you a positive divergent. So there's no reason at all why not to enter into NHPC. It's even holding a very, very strong support of 52 and a half. If for traders or investors who are looking forward to enter into this stock, can definitely place their stop loss around 52 and a half. That should do the trick for them. Speaking of the Genius Power, I think Genius Power is just starting. It's at the tip of its, moving out from a consolidation, after a long time of correction that I can see on weekly charts. So Genius Power, at best, the target comes out to be about 265 and 267. These are the targets that I can see across. Out of the two picks, if I have to give, of course, NHPC holds a more better weightage than Genius Power at the moment. So Genius Power with a stop loss of perhaps 233, you can buy and look for targets of 267 at best.
Okay, NHPC a better pick than Genius Power, but both are actually doing pretty well on the charts right now. Another stock that I wanted for you to track today is PCBL, Philips Carbon Black. Again, the stock has been in a sharp uptrend. It also hit an intraday high, in fact, record high again in the intraday levels today. Very, very smart move coming in. How are you looking at this stock, and would you continue to buy even at despite the kind of moves that we've been seeing on PCBL?
Right. So if we look at the weekly charts for PCBL, this would be the second week I can see that there's this big green candle. It means that it has been continuously moving in this uptrend as of now, and there's no signs of correction. So until and unless there are no signs of correction, there is no reason why one must exit the stock at any current levels. In fact, one should. I'm certain that many people would have already entered the stock and perhaps be still holding. Would request everyone, or maybe suggest people to place your trailing stop losses somewhere around 245. And for people who wish to enter fresh, 245 becomes your fresh stop loss. I'm looking for targets of 280 on charts. It's quite it's absolutely crystal clear where the stock is headed towards 280 odd levels with good volumes, no signs of exhaustion as of yet. So definitely I think 280 should be on the charts pretty soon.
Okay, let's look at how quality stock picking helps, and I'll request the PCR to fire the price of Praj Industries. You'll notice that we had picked it up at 605, 606. At the moment, the price that I see is topping 614. Let's see whether this breakout sustains or not. From 614, it's reversed back to 609, already up 5%. So this is something that you need to track for tomorrow. This is already 3:04 p.m. so still time for good stock picking. Your view on Sun Pharma, Sony? We've seen a record high on this particular counter earlier part of this week, and at the moment you have a mild profit booking happening around the 1200 level. Is this momentum likely to continue?
Right. So the reason why the profit booking is happening, perhaps because where the call writers are positioning themselves is at 1200 strike, and they are not letting go of that strike at all. So I think there's no open interest unwinding today. The data, options data, derivatives data is not suggesting any particular movement on the upside as of now. Maybe the profit booking continues for yet another day. There's one immediate support of 1185. Maybe perhaps by tomorrow, if it's breaking 1185, you can see further downside up till 1165, 1160. Now that's the best level. That should be the lower end of the range. It can turn around from that level. On the upside, one must definitely wait till 12:15, 1215 crosses and Sun Pharma is able to sustain above this level to enter for any fresh rally or fresh breakout from those levels. Because 1215, 1220 would be the place where the call writers start exiting the position, and the moment it happens you see very sharp short covering coming in. So it's far better to maintain caution as of now for this particular stock and wait for the higher levels to break, then to enter with more confirmation and more conformity.
Right. What we'll do, Sony, is a quick break, and on the other side of the break, we'll look at EID Parry. Remember, it's the entire Murugappa group led by CG Par and Tube Investments of India that is thick of trade on the long side. EID Parry on the other side, but for the moment, a small halt.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back on Market Today. It's 3:08 p.m. A lot of time still left for stock booking and on stocks which are actually creating a lot of news. Coming to you, Sony, on EID Parry. It's a blowout today. Very strong moves coming in, and this is in sync with the entire Murugappa group, which is doing extremely well in the charts. But first, EID Parry to you. A breakout on 200 DMA and very strong volumes. I have some news on it, but first share your views on how the chart looks technically.
Well, of course, Shailendra, if you look at the charts right now, it is a clear-cut buy from current levels because there's very huge volumes happening today and yesterday as well, with RSI going massively positive. Even if I look at the green candle, that's giving you a very clear indication of how the breakout is sustaining rather. 505 becomes your very good immediate support stop loss. I think as long as 505 is holding, the stock is definitely poised to take out its previous highs of 570, which was noticed recently. Approx like mid-September, somewhere around 570 something was seen. So it's back again on those tracks to test 570. The moment it crosses 570, that becomes another level of fresh breakout. I think from then again, we'll have to revisit the charts, whether it's sustaining above 570 or whether we can see some amount of profit booking taking place. But as of now, from current levels, 570 is the target to go.
Okay, and one interesting part, Sakshi, in EID Parry is that we are tracking the sugar theme, and EID Parry is, of course, one of those sugar companies based down south. So apart from sugar, they also make confectionery, and I'm sure you've had their toffees when you were a kid, as also they're very big in sanitary ware. So this is a stock that needs to be looked at, and of course a lot of momentum coming back into HPCL and BPCL. I hesitate and refrain from asking technical targets on both of these, Sony, because the run-up has been very sharp. Would you care to sort of look at both charts and give a view?
Definitely, Shailendra. I'll first look into BPCL. It's true that the run-up has been quite sharp, and not a lot of investors or traders would have gotten their chance, fair play of chance to get into this particular stock for BPCL. However, we feel looking at charts and looking at also the options metrics data, it's indicating that there is a lot of space left ahead for BPCL, somewhere approx a near term immediate short term basis 435 holds as your target, which is more than like 20 rupees from current levels. So I think 435 becomes your first level of target. If it's able to sustain above that, for a very very good medium term position play, 500 520 plus is also on the charts, but then that of course becomes more than a 6 to 8 months kind of a play, right? So that's something else that we can talk about maybe at a later stage once it's crossed 435. So I think BPCL is holding better as of now. And if I do look at Hind Petro is also looking nice as of now. The better pick becomes BPCL because of its very strong long built positions out of the two stocks. So I think BPCL holds. For Hind Petro, I think it's reaching a resistance of around 340, 345 levels. So hardly another 10 to 12, 15 points max on the upside. I think that's where we can see some amount of profit booking taking place in HPCL. That's the reason why BPCL holds out to be a better pick.
Okay, fair enough. Sony, let's draw your attention to the metal pack, which also has been in a buzzing zone. Several of the stocks here from morning are taking their chances to move higher. JSW Steel, Tata Steel, Hindalco among the top gainers as far as the Nifty is concerned. We also have Jindal Stainless, that's up almost 4%. Hindustan Copper from the mid-cap basket and the broader markets that are also doing very well in trade today. Ratnamani Metals, Steel Authority, NMDC of course is doing very well from the PSU basket too. Your own sense of how are you looking at the momentum in the entire metal pack, and which are the stocks that you would advise investors or traders to also continue to build positions?
Well, definitely, Sakshi. I think metals is one of the sectors which indicates where the indices are, heading forwards. I think I have always understood metals when the moment metals start giving out a very good, strong breakout and rally, you can see the whole indices, especially Nifty, following suit. So in metals pack, there's very difficult because all these stocks are looking quite attractive on charts, even on derivatives data. One particular stock that has not shown much of a movement would be Tata Steel. I think Tata Steel is yet to give you that breakout. Very nice, very good levels. 128 is that breakout level. So the moment it crosses 128, you can see it, rallying up to 135. 135 would be its first hurdle, first sort of resistance. But the moment it breaks 135, it'll be in a very different trajectory altogether. From there it'll rally towards 160, which would be a medium-term positional level for investors to look into. So Tata Steel becomes your top favorite pick, as long as risk-reward ratio is concerned. If the traders have to place a stop loss from current levels, I feel that 122 should do the trick. So stop loss of 122, look for targets of, first level you can look at 135, and then after that you can go for 150, 160 levels.
Fair enough. Sony, another space that I wanted to draw your attention, the fertilizer pack, including stocks like Deepak Nitrite that are buzzing away in the F&O space especially. Deepak Nitrite is now up by 3.2% higher in trade. And on the entire pack, apart from Deepak also you can talk about your favorite pick from the fertilizer pack, but on Deepak Nitrite I'd like you to share a target from the F&O space.
Definitely Deepak Nitrate, 10% long built positions until now. Let's see how the day and data comes out, but I'm pretty sure it will be on the long side as well. Very good targets of 2350 for a short term play. So that looks quite attractive. On the downside, for stop loss to be placed, I think 2135 should be that stop loss. This is a stock that I've been tracking for the past 3-4 days, and I've been noticing how it was continuously holding on to that 2130, 2135 odd levels. And of course, I was expecting it to cross 2200, which it already has today. But even now, I feel that there's a lot of steam left for this particular stock, looking at how the long built up positions are building up so aggressively in this particular stock. plus how the volumes have acted out on charts, right? So 2350 holds out to be a very easy target for Deepak Nitrate. I think it'll be a short term, it may be like a week's play or so, but definitely those targets are looking forward. And the other stock from this particular space, which I've already shared, would be GNFC. I think GNFC would be one of the other picks that I'm keeping it on my radar. And just to give a disclosure, we've also recommended GNFC and Deepak Nitrate both to our clients from JM base. I think GNFC is also heading out for a breakout. I think perhaps maybe by tomorrow, day after tomorrow, we should be looking at those breakouts. So here's preempting that breakout with the long built positions that it has seen today. And like I've said, it shows you target for 740 plus levels.
Okay, let's again revisit the stocks that we had picked up. The PCR will fire a chart of Praj Industries, now a record high. And what's really interesting is you see this 2-3-5 minute move that's coming in on substantial volumes. So we checked it at about 604, 605, 606, now 619 in front of you as far as prices are concerned. This is something to be watched. EID Parry, fresh intraday high coming in at 533.35, and the size of the block deals is fairly substantial now. 3 transactions, 11,000 shares, 11,000 shares, and 24,000 shares. So these are the breakouts that you get to track as far as market today on Business Today Television is concerned. And the most immediate high that probably EID Parry seems to be tracking will be something like 570. Today's volumes will shortly overcome yesterday's bar, and this is something to look at. Praj Industries, again a price move coming in, 621.20 now. What are the stocks that are likely to move on charts tomorrow is a view that Sony will give, and this one comes from CSB Bank. Most probably a fresh record closing on CSB Bank, the highest since its IPO. Your views, Sony, on what the charts are telling you on CSB Bank, 377.40.
Yeah, so definitely, Shailendra, when I look at it, I think 380 is still a hurdle for CSB Bank. Perhaps tomorrow, if this level is breached and sustained, maybe via a gap up or even during the day, then you will see very good fresh breakout, and you'll see a new rally altogether, which will take you towards 400, 410 odd levels on immediate basis. So I think one must definitely wait for that 380 levels, which most likely may happen by tomorrow itself. Even the stock looks like to be a good movement coming up for tomorrow. I think on the downside, it's holding today's low also is a good support of 368, but however 364 seems to be your short-term immediate support, which one must place as your stop loss in case you see that breakout coming above 380, and then you can ride for targets of 410.
Okay, fair enough. Sony, what we'll do is we'll take a very, very short break right now. When we return, we'll take the BTST, STBT trades from Sony, so do stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today Television with me, Sakshi and Shell. And we also have our guest, Sony Patnaik, with us. Sony, tell us what are the BTST, STBT trades you'd like to recommend to all the viewers?
Right, Sakshi, I'll have two trades for BTST. One would be from the defensive space, which is actually FMCG. The entire sector acts quite defensively, even if we see a slight dull move in the indices tomorrow. So the pick would be Kolpal. Kolpal, you can see, we've seen it's trying to break that level of 2200, which is a resistance. And the moment it does that, you'll see very sharp short covering coming in because all your call writers will try to exit that position. So with a stop loss of 2165, you can buy Kolpal and you can look for targets of 2230, 2240. So these are cash level targets. The similar can also work for futures as well. So maintaining the stop loss of 2165. The second pick would be from Tata Communications as a stock. So I think the entire media telecom space is showing good positions today, be it Sun TV, be it Tata Communications. So Tata Com looks quite well. Even in yesterday's choppy market, it did not break 1690, which is a very crucial support. So holding a stop loss of 1690, you can buy and look for targets of 1760 on the higher side.
Okay, two stock picks for the BTST trades. Colgate Palmolive 2240 as the target, 2165 as the stop loss. Tata Communications 1760 as the target, 1690 as the stop loss right there. All right, your views on the real estate space and any particular stocks you're looking over here as well. Sony, this space has been of late buzzing quite a lot, and anything that looks good on the charts?
Right. So definitely, if you look at the entire real estate space, DLF, Oberoi Realties, Godrej Properties, they've moved on quite well. So, looking from current levels, if someone has to pick for a BTST or maybe a 2-day trade at best, from current levels, Oberoi Realty is that stock which is looking quite attractive even at current levels, holding on to good support of 1390, 1380. That entire band is very strongly being held in like 2 to 3 trading sessions. So to put a stop loss of 1380, one can still buy Oberoi Realties. The targets are quite massive. I think 1440, 1450 can be still seen ahead maybe in 2 days of time.
India Bulls Real Estate, can you look at that stock too? It's surged about very, very sharply, 5-6% odd in trade.
Right, definitely. But I can also see that, after hitting a high of 87.7, it has come down, although the volume speaks a different picture altogether. So perhaps one ought to wait for the levels of 88 to be breached and sustained for this particular stock. After that, only you can see some fresh rally coming in. So above 88, you can buy, and then you can see, fresh targets of 92, 94 odd levels. So I think that should be fairly well. But it's rather wait for the level to break 88, so then only you can see those levels.
Okay, let's start a bit of investigation within the auto pack. The PCR will throw in front of you a chart of Mahindra and Mahindra on the longer term, a 1-year chart, and we'll see a lot of actually profit booking happening at a time when the entire auto space is doing pretty well. Sony, coming to you, what are the charts telling you? And typically we see that a momentum in other stocks within the sector is a precedent for the remaining to follow. So Mahindra and Mahindra has not done anything today, but the open interest and volume are higher. That basically shows that smart money is moving in. What do you expect of M&M over the week?
Right, so if I look at a slightly longer outlook for this particular stock, it has been consolidating, on a weekly and monthly chart, I can see that 1450 to 1600 on a higher side has been that broad consolidating range. Any move above 1600 will give you that confirmation of that breakout coming in. It has not yet quite come in. But from current levels, like 1547, 1548 seem to be the current price. With the kind of volumes and long beta positions that are adding, this is indicating that the stock is heading towards that resistance of 1600. Now, whether 1600 is to break and sustain, that will be a different question when it reaches that level, and we'll have to see how the positions are taking place back, after then. But for a longer term period, strictly speaking on how the technicals are looking, I think 1600 is holding that key level of breakout. Anything above 1600 will give you a very good rally, and you can see, very good targets of 1800. That becomes a far-fetched scenario only when the breakout happens. But until then, from current levels, 1600 seems to be approaching quite soon with the kind of data that's building up.
Okay, ladies and gentlemen, it's 3:26. Let's start wrapping up the markets. In any case, brokers will prevent you from taking positions beyond 320. So far, we have a flat, absolutely flat close on the Nifty when it comes to the weekly expiry, 19,815. At the moment, it had started at 19,812. And in any case, there wasn't much of an activity intraday as well. If you look at the high, it was 19,870 at the beginning of the first 5 minutes of trade, and the low has been 19,790. So a 50-60 point move that has come into the intraday positioning and an absolute flat close. The Nifty now enters the last week of a fabulous F&O expiry of November. Remember, Monday is a holiday, options premium will get squeezed further, and so far between 26th of October when November's expiry started to today, Nifty is up 4.8%. A fantastic rally by any means. The Bank Nifty 150 points higher, 43,600. Remember, today is the first day of the last weekly settlement of the Bank Nifty. Apart from that, market has been in a sideways gain. Let's look at the Nifty gainers at the moment. As of now, there are Hero Motors and Bajaj Auto. In the morning, it was communicated that autos would be leading the rally. Two-wheelers in top gear. Record high on Bajaj Auto, 5934, up 3% after yesterday's 5% rally. Hero Motors 3569, up 4.5%. Eicher Motors is the fourth gainer, 1.3% higher, 3885. This is also headed towards a record high. In terms of losers, it's Cipla down 7.5% after the US FDA's warning letter on one of its Madhya Pradesh units. 1173 for you. Profit booking happening in Ultratech Cement, 1.72% lower, 8608. This is also a fresh record high around that vicinity. L&T, Grasim, Bajaj Finance, all dropping less than 1%. In terms of all-time highs in the market, let's look at the NSE 500 list, and you'll see Philips Carbon Black, which is something that Sakshi had pointed out. Praj Industries 619.75, a stock that you should be looking for tomorrow, as also for the rest of the coming week. Bajaj Auto, Power India, Uno Minda, Prestige Real Estate, Colgate Palmolive. These are the stocks that are hitting fresh highs as far as the markets are concerned. From the point of view of Sony, we'll be looking at Colgate Palmolive tomorrow. It's a BTST trade. As also from my side, we'll be looking at Praj Industries, Aditya Birla Finance and Retail, Mahindra and Mahindra, and of course, Balrampur Chini. Sakshi.
Right, so the markets are shutting shop absolutely flat, but the good part is several of the sectors have pulled up, and real estate space remains buoyant, 1.2% higher. Oil and gas space, that will be important to watch out for even tomorrow. All your oil and marketing companies are up in trade, HPCL, BPCL, IOC. Small caps are doing better in trade, just like how Shell pointed out. Praj Industries, one stock that you need to watch out for. In fact, the entire sugar pack that you need to watch out for, we have, like Shell pointed out in the morning. In fact, even before we had hit pre-open, Shell was talking about the Balrampur Chini as one of the stocks to be watched out for. Apart from it, we now have a rally coming into EID Perry and even Sri Renuka Sugars, that's pulling up in the small cap 100 basket as well. Some of the other stocks from the small cap pharma space also, like Piramal Pharma, that's picking up in trade. Ajanta Pharma, these are the stocks that you should keep in our eyes. Jubilant in Griva. We also have some stocks from the broking space like CDSL and IFL Finance that you should continue to watch out for. And of course, the shipbuilder stocks like Cochin Shipyard, GRSC, and also Great Eastern Shipbuilders, Mazagon Dock, all of them in focus as well. With that, the markets shut sharp. 1.5% lower in trade, 1.5 points lower in trade at 19,810. Many thanks, Sony, for being with us on the show and discussing all of these wonderful stock ideas. Shell, many thanks for joining us on this closing action as well. We'll continue to watch out for what's beyond the markets as well. So do stay tuned onto Business Today Television for a whole lot more coming up right up on your screens.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.